Hi everyone, and welcome back to Economics A-Level here on YouTube. This video is going to have a look at how analysis in A-Level economics can be made good, how we can make a success of it, and how you're going to stand out from other students taking this exam. So first of all, we've got to ask, what is analysis? Analysis is a way of showing how well you understand the subject. So it's a way to describe in logical detail how economic processes work, and a way of explaining the impacts of, for example, changes in government policies on the economy. We're going to see that analysis is probably the most important skill to develop at A-level, because when we come to do evaluation, the techniques we're going to use for that are the same sort of techniques in terms of logic and how we explain how things work. Let's go through some secrets to successful analysis. Firstly, we've got to be precise. Then we've got to be clear and logical, and we've got to explain things step by step. We're going to see that we can't forget ceteris paribus, all other things being equal, and that we've got to deal with the question at all times. We're going to have a look in a couple of minutes at what chains of analysis are and how these are very, very important to doing successful analysis at A-level. So let's just start with a little example of bad analysis, what it looks like, and what good analysis should look like. So I've come up with this question: analyze the impact of changes in fiscal policy on the government's macroeconomic objectives. I put the word assess in there as well because this is probably more likely to be an assess question, but we could also analyze the changes as well. So we're going to just do it from an analysis point of view. So here's an example of what bad analysis would look like in answering this particular point. So that says, when the government raises tax, this leads to a fall in spending, which means unemployment rises. So we need to ask ourselves, why is this bad? Well, it's bad for a number of reasons. Firstly, it doesn't specify which type of tax we're talking about, because in economics, different taxes have different effects. So if we're talking about income tax, it's going to have a different effect to, for example, VAT, petrol duty, or corporation tax. I think the second problem with this is it goes on to tell us about a fall in spending. But again, it's not being precise because it's not talking about what type of spending. Is it consumption spending, investment spending, and so on? And then it's bad for another reason, because it jumps straight ahead to which means unemployment rises. But what it doesn't do is it doesn't tell us the steps in between. So this is where we're going to see later on in this video that we have to write step by step using chains of analysis. A good example for this question would have been as follows. So when the government raises income tax, so I've chosen a specific tax now, this leads to a fall in disposable income for consumers who are employed, because obviously not everybody's employed, so they're not all going to be affected by the income tax change. This will mean that they consume less, leading to a fall in the consumption component of aggregate demand. All other things being equal, this will cause aggregate demand to fall, shifting to the left, which lowers GDP and causes a rise in unemployment. Hopefully you can see that this example goes step by step. It goes through what the cause is, what effect it leads to, and what consequences it has. Whereas the initial example would be what your teachers would write on your work as vague, undeveloped, and so on. So when they write that, they mean that you should be doing it like the example that says good there. So let's have a look in a little bit more detail at what precision means. Precision means, firstly, defining things fully. So, for example, you do not want to do the following. You don't want to say that demand is the quantity purchased of a good. It's a bit vague. It's lacking detail and precision. Instead, you want to say demand is the quantity of a good or service purchased by a consumer at a given price over a given period of time. Defining fully and completely is essential. The second thing about precision is that we don't want to forget parts of our explanation. So, for example, this is a bad way to do it. When income rises, this causes the price of the product to rise. You can see immediately it's not really telling us why. So when your teachers always write a why question mark on your work, this is probably the reason for it, because you're not telling them what is going to happen that's going to cause products' price to rise in this example. Instead, we should write the following. When income rises, because this is a factor of demand, this will cause a shift to the right in the demand curve. There is an expansion of supply and an increase in the price of the good. And ideally, you'd have a diagram with this to show that. But that's what we mean by not forgetting parts of what you're explaining. So that's what precision is, very important. Clarity, equally extremely important. We don't want to be writing ambiguously. You want to avoid all sorts of vagueness. An example of ambiguous writing is this: the Bank of England changed interest rates, which will cause an increase in prices. You can see how this is vague. The person has not said what the change in interest rates is. Is it up or down? We've not said also what the price is and why it would increase. So instead we want to say the following: the Bank of England's Monetary Policy Committee reduced interest rates, so already we're being clear, from 0.5% to 0.25%. This led to an increase in consumption as the incentive to save was reduced because of the lower returns gained from saving. This causes aggregate demand to shift to the right and will lead to an increase in the price level if nearing full employment on the long aggregate supply curve. We've avoided all kind of ambiguity in that example because we've said exactly why things are happening, when they're happening, and the causes of them. So precision and clarity, very important. Being logical is probably the most important thing. And when we say we have to be logical, we have to think in kind of chains of analysis. And all that a chain of analysis means that we start somewhere and we go through each point along the road to the end of the journey. So for example, you can see here that we have a change in whatever A is. This is going to lead to something happening, which we're calling B. That's going to lead to something else happening, which is C. And the consequence or outcome is going to be causing whatever D is. That's what you need to be thinking about when you think about being logical and analytical. So the question now is, analyse how monetary policy helps an economy recover from a recession. We'll break this down in a second, but to give you an example of what it should look like, it is as follows. So if the Monetary Policy Committee of the Bank of England vote to lower interest rates, as they did in 2009 and 16, this will lead to consumers having less of an incentive to save. This is because the return on saving in the bank, the interest, is reduced. This therefore leads to a reduction in saving and an increase in consumption as consumers now have a lower opportunity cost when spending money in shops. So you can see already that we've had our change, the interest rate, and we've had a look at what it's going to cause. So it's going to cause less of an incentive to save. We've then gone on and looked at what it leads to. So a reduction in saving, increases in consumption, and then we finish this off by saying that when the consumption increases, we're going to see a rise in AD, which, if all other things are equal, shifts the AD curve to the right. And then we go on and look at what this causes: a fall in unemployment, an increase in growth, and a movement towards full employment. So step-by-step analysis has to be completely logical. And we talk about an internal logic. And what we mean by that is step 1 that you make has to lead to step 2, which leads to step 3, which leads to step 4, and so on. So it's got to be, the point itself that you're making has to be internally logical. You can't start with step 1 and end up at step 5 with nothing in between. That's not logical. We also have to think about external logic, i.e. the logic of that whole point you're making within the context of the whole essay. That has to be following logically from what you argued beforehand. The external logic will lead to a different video. For now, we're going to concentrate on the internal logic. So in the example we just used, we took step 1, the change in the interest rate. So that's step 1, and this is leading to consumers having less of an incentive to save. Step 2, the next logical step, will be to say why that is. So this reduction in the incentive to save is because the return on saving has fallen. Step 3 will then be to go on and say what that will cause. So this is going to lead to a reduction in saving, an increase in consumption in shops, because now the opportunity cost when spending money has fallen because they're missing out on less interest than before. You then have to go on to step 4, which is to talk about what that then leads to. So that leads to consumption increasing, which causes a rise in aggregate demand. So you can see so far we've gone step by step by step to get to this point. Now this point is particularly important because we have said which, if all other things are equal, which is what ceteris paribus means, this shifts the AD curve to the right. So we cannot forget ceteris paribus. When we're trying to be logical, we have to hold every other factor constant so that we can follow through our step-by-step logic to get to the point that we're trying to make, what the consequence is. So always remember, hold other things constant for now. When you come to evaluate, you can change other factors that you held constant before. This then leads to step 5, the next consequence. So this it leads to an increase in real GDP and a reduction in unemployment. This moves the economy closer to full employment and reduces the negative output gap. So again, we continue in our logic by saying now what all these steps have led to and what they caused. Step 6 is very important. We have to deal with what the question wants. In analysis, if you don't do that, there's no point in doing it because you're just then saying things without actually dealing with the question. So point 6 or step 6 is that we've got to answer the question. So thus, monetary policy, and this is an inflationary or expansionary monetary policy, helps an economy to recover from recession by stimulating demand-led growth. And this then is answering the question of analyze how monetary policy can help an economy recover from recession. You notice that we've used the wording of the question in that response. You should also be using diagrams to help with analysis. So in this example, we're trying to analyse the impact of implementing a minimum wage on the UK labour market. Here, we're going again step by step. If the minimum wage was in place on the UK labour market, assuming it was above the equilibrium, this would lead to unemployment. So that's saying what is going to happen, and you're going to go on and explain why that's going to happen. So with the use of the diagram, so this is because as seen on the diagram, although the market was initially at PE and QE, so that's the equilibrium price and quantity, once the price floor is put on above the equilibrium, it will force the price of labour up. More workers are willing to supply their labour as a consequence. Supply will expand. So we've used the diagram to show that supply will go from QE to Q2 because labour is more incentivized to work at that higher price. So simultaneously, we're going to use the diagram again now to explain this point. Demand for labour is going to fall. And this is because the cost of production for firm will rise because we're paying higher wages now. And as illustrated on the diagram, the demand for labour will fall from QE to Q1. And then we use the diagram once more as indicated on the diagram, and this is the bottom part, where once the market cleared at equilibrium quantity, there is now a state of disequilibrium and unemployment between Q1 and Q2. So you can see again, we've gone step by step, but we've used the diagram to help. And diagrams do very much help with what you're trying to analyse. So to summarise, analysis is a hard skill to perfect. You're going to have to sit and practice and be patient. The hard bit is understanding that being logical means going point by point, being completely precise. So at the start of an essay, when you define your key ideas, you set the scene, especially in macro, with some current economic context, that all underpins the analysis that will follow because you'll be referring back to parts in that. So precision and logic are very important. You've got to go from the start of a point through each step to the end. Don't jump around in a point because then your analysis becomes confused and vague. Hold all other things constant to analyse the effect. You change ceteris paribus during the evaluation, and always at the end of each point you make, at the end of each paragraph, deal with what the question wants. Analysis won't be excellent if you don't do that. So in the next video, we're going to have a look at evaluative techniques. So I hope I'll see you then, and thanks for listening.